Hey, good morning, everybody. Welcome to Tuesday. Hope your week is off to a great start as we'll look to see what the markets did yesterday and how they'll be moving forward today as we get ready for Dave to join us here in just a few seconds. Hey, before he does that, though, let's not forget that there are so many things that we lack control over. And so when we can control something, that's really good. And one of the things that you can take control of is your investment portfolio. You need to know how much risk you have in that portfolio and how much risk you should have in your portfolio versed on your current circumstances. Give me a call at 863-382-0037 to schedule your core retirement analysis. Hey, with that, we got Dave coming up next.
Warrior, Esteban is there. I live for loving you. Good morning. It's 8:40, 20 before 9. And it's time to check in and see what's going on with our money at Wall Street. On the telephone with us is Phillip Statler from Statler Financial Services in downtown Sebring. Phillip, good morning. Good to hear you today. How are you?
Hey, good morning, Dave. Doing well as we head into this first week of June, man. I'm telling you, a mixed bag yesterday, but a lot of red ink this morning.
I was afraid you were going to say something like that. I was looking at yesterday, and I asked you before we went on the air whether there was any one stock on the Dow that might have suffered because we had kind of a reversal of a flight to quality again yesterday. Dow fell by 115 points at the end of the day, but the S&P got a modest gain of about 5.5. Nasdaq, on the other hand, was up over 0.5%. Up $93.65. And when I see that kind of trend, I start thinking that maybe the economic reports gave investors a little bit of optimism that the Federal Reserve might say something optimistic about interest rates when they meet next week, because we had a couple of reports yesterday that indicated the economy actually is slowing just a little bit. We got the the ISM Manufacturing Index out of Standard & Poor's, and it showed us solidly into contraction mode, went down from a little above 50, which is neutral, down to 48.7, and then you saw the construction spending report, and that also slowed down a little bit, right?
It did. The expectation was it was supposed to increase by 0.2%. It actually went down by 0.1%. And that was better than March's number. March was down 0.2, but still it's heading in the wrong, I guess you'd say the wrong direction.
And possibly the right direction for people that are looking for an indication next week when the Open Market Committee meets to talk interest rates, that maybe the language coming out in the press release at the end of it all might indication that, all the Fed governors that were doing the rubber chicken speeches over the last few weeks saying, yeah, there might even be an increase coming, that somebody will slap them silly. Because when I see NASDAQ going up and the Dow going down, I kind of think they're getting more adventurous and optimistic about interest rates.
Well, that's true. And I think something else hit me this morning. I saw a headline. I didn't get a chance to dig down to the article, but JP Morgan basically says that they feel like stocks are going to hit a brick wall this summer.
I saw that at the head of one of my sheets, and I couldn't find the actual article for it. Why do they think we're going to run off the rails?
I don't know. Like I said, I didn't get a chance to dig down deep, but they think they're going to hit a wall this summer.
Morgan's one of those companies, I think, that has us up expecting the S&P to finish at something dumb like 5,600 at the end of the year. They're not the real naysayer in the bunch, are they?
I don't remember.
Trying to remember, every time we get that projection, there's one real downer Debbie that keeps saying we're going to end up dying and going down to 4,200, but virtually all the big houses are saying, yeah, mid 5,000, maybe 5,600 before the end of the year. Heck, we're just shy of 5,300 now. If we went down to 4,200, I think a few of us might be tempted to jump out a window.
Well, that would definitely be over the correction mode into bear market territory, don't you think?
That would be a grisly bear market if we went down that much all at once. Tidbits out today. I got a look at auto sales year to date. We so far had nothing but bad news for indications for growth on the economy, which means good news for interest rate projections. They issued the motor vehicle sales annual data last night about 8 p.m. Overall, we've sold 15.9 million vehicles. 12.4 million of them were North American vehicles, and both of those numbers were more than expected. So I guess we can look at some decent guidance coming out of GM, Ford, and Chrysler, right?
It sounded like it, Dave, which is really kind of some good news for the auto industry. But I've seen some deals coming out, though, not necessarily on pricing of cars, but I've seen some interest rate deals being thrown out there, Dave, as incentives.
Yeah, I don't want to spoil the surprise for one of our major dealers, but you can expect an incentive interest rate deal coming out this month in a couple of major brands that I've heard about, too. It's just going to happen. Other indications things are slowing down a little bit. The tech industry is starting to lay people off in a weird place. You found a tidbit on Google. I found a tidbit saying Microsoft is going to lay off hundreds of employees at their Azure cloud unit. Azure is the industrial version of Windows that resides online, and it's been one of the growth points that's given Microsoft so many good quarters. Now they're laying a few hundred people off of that, and you're saying Google's got the same thing in mind, huh?
Yeah, the Google's doing the same thing. They're cutting 100 positions within their cloud unit, and so that's kind of interesting too. Google's trading down just a little bit this morning.
Maybe they've promoted one of their artificial intelligence bots to manager, huh?
Maybe so.
Could have happened. We got to make mention of it and giggle for a little bit about this, because in the middle of the day yesterday, the whole world went, woohoo! Berkshire Hathaway just absolutely crashed. It went down by 99.9% of its price. And then after a few minutes, somebody in the New York Stock Exchange said, oops, that's a mistake. You got to imagine being a broker looking at your instant tick and suddenly see the bottom fall out of Berkshire Hathaway, of all the companies to have that happen, right?
That's right. That's right. And then you still got GameStop and those guys killing it with the meme stocks. But I've got sounds like maybe some bad news for the Roaring Kitty, who has the 116 million shares or something like that. But it sounds to me like the broker that he's sitting on is fixing to remove him from the platform because they're afraid he can manipulate the price.
That mischief-making kid. Yeah, he boasted yesterday that he's maintaining his position in GameStop, and he's got a big stake in it. So expect a few more memes encouraging the Reddit gang to go buy GameStop, right?
Exactly.
It was up 21% yesterday, so far it's working. I'd hate to see this guy retire filthy rich for manipulating the market, wouldn't you?
Yeah, that just wouldn't quite be right.
I'm just kind of into justice more than anything else, or karma, one or the other. Whole lot of stuff coming up later on. We've got a couple of big reports coming out later on today. We're going to get the JOLTS job opening report later on today. Factory orders coming out about 10 today. And the floodgates really open up yesterday morning because it's employment week. Tomorrow morning early on, we're going to get the private sector employment number out of ADP. On Thursday, we get both the job cut numbers and the initial jobless claim. And then on Friday, the world is going to go absolutely crazy because we're going to get the official federal unemployment rate and the number of non-farm job positions that we created last month. And then we get all of that 48 business hours ahead of the Federal Reserve meeting. Do you think it's going to be an active market trading day for the next 3 days?
I think we could see definitely could see some movement in the next 3 days, Dave.
Expect so. We're at the end of earnings season, but we do have a couple of things going on. One thing we know, though, is Bath and Body Works. You saw a report on?
Yep, they reported, and they did okay for the quarter. They beat on earnings and revenue. But the issue for them is their guidance was slightly disappointing. They expect their earning range for this current quarter to be somewhere around 31 to 36 cents a share. Well, the analysts believe it should be 38 cents a share, and that's got them trading down significantly this morning, down about 6%.
Woo!
Yeah.
That ain't good news. Any other tidbits from the traded companies out there?
Well, we talked about Alphabet or Google. I got GitLab, which is another software company, and they beat on this last fiscal quarter. They came in at 3 cents a share versus they were expected to lose 4 cents a share. Revenue ahead of expectations as well. Despite all of that, they're still trading down 2.25%.
Oh, geez. Well, we'll start out by summarizing yesterday. Blue chips were down, the adventurous stocks were up, and boy, we're going to like the price of oil. How are we doing 45 minutes before the markets open, Philip?
I'm looking. I don't see a stitch of green ink on my board at all right now, Dave, which is unusual. The Dow is
Mm-hmm.
down right now 0.25%. The S&P 500 is down 0.3. The Nasdaq 100 is down 0.2, and the small cap Russell 2000 is down 0.9%. On the other side of the coin, we've seen silver retraced about down 2.5%. Still barely above 30 at $30.02 an ounce. Gold's down 0.7 to $2,352 an ounce. And then crude oil, jump up and down, Dave, down 1.7% right now to $72.95 a barrel.
That's almost a fire sale price compared to what we've had. And I saw a tidbit on one of my tip sheets that the Saudis and a couple of other big oil producers are rescinding those production cuts they did about a year ago that was boosting the price of oil. So we might be under 70 if that trend continues. Would that be nice or what?
That would be nice. It would be good to see that at the pumps for sure.
Absolutely. Looking overseas, as usual, the Asian Rim follows our closes, and the Europeans follow our futures. The Asian Rim didn't know what to think with our blue chips going down and everything else going up. They were kind of mixed. On balance at 6 a.m., it was pretty much a whole steady day across the Asian Rim markets. Over in Europe, they're looking at our futures and going, uh-oh. We got losses as much as 0.7% and a minimum around 0.33% this morning. The overall European index is all red for all intents and purposes, down about 0.25% halfway through their day. Getting a beat on how to plan a retirement and make sure it happens the way I want it to. It takes a neutral pair of eyes that can look at me with some steel eyes and say, Dave, you're screwing up. How do I find you to give me the bad news, Philip?
Hey, Dave, I developed the core retirement design specifically for that reason, to help people design that retirement that's going to last them a lifetime. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. at noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
And back here again tomorrow morning to tell you what actually did end up happening today on Light FM. We'll see you then, Philip.
All right, man, you have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, again, I want to thank you for joining us. Have a great day. I look forward to speaking to you again tomorrow. Take care.